Good afternoon. This is Ken at Tortoise Capital with the combined podcast for the Advanced Swing and Advanced Day Trading Workshop for September 3rd, 2018. The initial question was I seem to be super productive. Can I talk about how I manage my time and tasks? Off the top of my head, these are the things that I do. I use the goal setting worksheet that I discuss in the course. You can follow this link. And if you search in the file section, you'll discover many applications of the goal setting worksheet. Works for me, works for traders, works for my soccer players. I also do a periodic review of all my activities for strategic alignment, make sure everything's focused on my big five. When I'm dead, I want to be remembered as a good father, husband, teacher, student, and warrior. Warrior in the Eastern sense of living an intentional life. And so I have four main structures or lines of operation in my life. Teaching at the military college, teaching in a doctoral program, soccer coaching, and then my work as a trader. All four of those elements are strongly connected. The lessons I've learned from each help reinforce my behavior in the others. And so by staying aligned with who I am and what I do and the way I work, there seems to be some synergy. When I'm looking for new ideas, I try to figure out how that maps to my existing structures of the big five and my activities so that I can get a sense of how it fits into the overall sense of identity I have. That seems to help me be productive. I analyze the parts of self so I always know what mode I'm working in, whether it's as a decision maker, a chief of staff, a R&D kind of person or coach. So I'm always clear on the purpose of my activity and the role that I'm playing and what that says for the nature of the work. I use a personal Kanban technique based on the principles of Japanese manufacturing. It reduces work in progress, is a very orderly way of pursuing priorities and working effectively and efficiently, and to keep track of the next thing to do. I'm always searching for new ways to manage productivity. It generally seems to follow along the lines of the Toyota style of management. Toyota Kata is a very good book that describes that. I use the Pomodoro technique for tactical time management to get away from multitasking, to work in short bursts on the most important things. I find that to be very, very helpful, particularly because I know what times of day are my productivity windows, and I can schedule high priority tasks for that time. I relentlessly protect my personal time, and I use accountability partners to keep me focused on things that I've declared are my duty, and so that's my highest value. So I bind myself to support others and make my high priority tasks a way to fulfill my most important value, which is my sense of duty to others. All of those things help me optimize my time. Okay, for swing trading, MPRC could go either long or short. If it goes above the prior day's high and then later it goes down below, do I take both long and short? If that symbol is in a critical state, and it almost always is when it's MPRC, then yes, that could happen. And if I'm using a wider stop, though, than yesterday's low, and it hasn't been hit by that, then no. But that would not surprise me to see that. In the prior Q&A session, I mentioned a trader from India trading MPRC. He doesn't carry losing positions to the next day. Is this part of the MPRC rule? The MPRC is a strategy and not a strict rule set. If it were a strict rule set, then it would be a system. But as a strategy, it can lead to the development of systems once you personalize it. That was a rule that I suggested to him to help him with stress management and also to cut losing positions short. MPR is a system that should start off well, and so not carrying losing positions to the next day helped him sleep at night and improved his performance. So it seems like a good idea. Question 2. Is swing trading using the RLCO and AL framework exactly the same as intraday trading? Are there any other differences? To me, the only significant difference is this one, the possibility of gaps on swing trading, whereas day trading has relatively continuous trading. on these liquid instruments intraday. Otherwise, it's exactly the same, and there's a goodness in that fractal nature of the framework. It allows you to make the same kinds of decisions regardless of time frame. In chain trading for intraday, we've shifted now. In chain trading, should pocket trading be avoided when the Bollinger Bands are narrowing and entering an SQC as shown in the diagram? Let's take a look at the diagram. So here you see the Bollinger Bands narrowing. You have an SQC developing here at the pinch. This is a breakout. You should absolutely take that short. The size of this move tells you that this is in play. This almost looks like a failed owl in here. In fact, there's an owl entry. This would be a pocket entry short, a P1F, and when it violates the low of this double bottom, you absolutely should be short. That's a high priority time to be short. Look down here. You just had a cross from spring back into the winter. There's an expectation, or you wouldn't be surprised if the size of this move from here to here was replicated from there to there. If you were just looking at this at the hard right edge, you could not distinguish that from the beginning of the second leg, and so you absolutely must take that trade. You must also take this trade short because you have a high, a lower high, and you have another failed signal down here where it goes into the winter. However, this is an excellent recovery move. This is an owl the other way. So should you take those moves? Absolutely yes. That's the essence of the system. The only reason you wouldn't take those was because you thought you had the ability to predict what the follow-on move was going to be. But look what they do. This one is a scratch. This one is a scratch. That's a stop and reverse. That doesn't matter. Those failure to follow through signals are not an indictment of your judgment or the system. They are very simply low risk ideas. You paid your money. You anteed up. You didn't get cards. You folded them quickly, and then now you're into this on the long side, and off you go. So you have one big trade, two scratch trades, another reasonable trade here. That's what you do. Okay. So you can still trade it. They all look the same leaving the station. Don't expect to be right. It adjusts what your expected moves might be when you're calculating reward to risk, perhaps. Still manageable and meet your parameters. Go for it. Next, what are the frog champions? The ones with the highest FQN? No. Frog champions are the symbols that are found by Tony DeQuick's research to be extremely robust in terms of trending this intraday across all market conditions. A high frog quality number is only one of a number of reasons to trade it, and not even the most important. So the best frog symbols are these across all seasons. These AAA champs were very good and can be traded effectively with the frog, but you would always prefer the frog champion. The chumps, those four, are ones that are inverse frogs, that you are better off waiting for a movement of a frog box and then fade that. And they tend to be large, mature companies that don't have runaway intraday trending characteristics but revert to the mean. A couple other ideas: that if you put a filter of a 30-day regression line, a slope bracket of 0.1, and then above 0.1 only take long, below minus 0.1 only short, and then no trades when it's in the DMZ, that seems to add value. There's a strong relationship between ADX and expectancy on the frog champions, that whenever ADX is greater than 25, you're entering a period of exceptional performance. Stronger is better. There's a strong positive relationship between that DMZ concept, demilitarized zone, and expectancy. Mild correlation with range and expectancy, not enough to trade on, meaning that yesterday's range is not enough to be the indicator. There's no relationship between frog quality number and expectancy. It's simply when you're trading with mechanical rules, but it does help you with position sizing and taking advantage of surprise. So you've got to know what you're trading and become proficient in it, and that the frog tends to perform the best in periods of low volatility, followed by the kinds of breakouts. Now, what's interesting is that periods of low volatility are exactly the kinds of things that do create higher frog quality numbers. So when the market is quiet, it's like an old Western. Yeah, it's too quiet. Be ready to trade it. Number 3, when to enter a Z3P as soon as it touches the line, or wait for further confirmation. For me, if I'm in a Z3P, I've been known to break out of a Z2, especially if it touches one side at Z2 and then reverses and then crosses. A Z2 is often where I'll get in rather than waiting for Z3. You don't have to wait beyond Z3 though. As long as you're playing ruthless risk management, it might fail a little more often, but I'd rather have the aggressive entry as long as I'm there to manage it. When you're first learning the technique, though, a breakout from Z3 is sufficient, and that's either price touching the line or 1 penny beyond. Okay? So that's today's questions. Thanks for your kind attention. Enjoy the rest of your Labor Day.